Hi, and welcome to the channel. At 10:42 Eastern Time, 14:42 Greenwich Mean Time, the Dow Jones Industrial Average was down 391 points or 1.2%, while the S&P 500 was down 1.1% and the Nasdaq Composite was down 0.7%. This is due to investor concerns over the health of the banking sector, as SVB Financial filed for bankruptcy protection early Friday after a run on deposits at its Silicon Valley Bank forced regulators to shut it down. So, what does this mean for your investments? Well, if you have any investments in the banking sector, you may want to consider reevaluating your portfolio. It's also important to note that the shakeout in the banking sector could give the Federal Reserve extra reason to be cautious about interest rates as it heads into next week's policy meeting. Before SVB's woes, expectations had grown high that the Fed would raise rates by 0.5 percentage point, as Chair Jerome Powell told Congress the fight against inflation wasn't over. But with small and regional banks under pressure, lending could contract and slow the economy. That gives the Fed room to raise rates less aggressively. Most futures traders currently expect 0.25 percentage point hike. However, it's important not to panic and sell off all of your investments. Remember that investing is a long-term game and short-term market fluctuations are normal. In fact, many successful investors see market downturns as an opportunity to buy quality stocks at a discount. One stock that may be worth considering is FedEx Corporation, NYSE FDX, which saw its shares rise 7.8% after the logistics giant raised its outlook for the full year, as cost-cutting maneuvers kick in. This is a good reminder that there are always opportunities in the market, even during times of uncertainty. It's also important to remember the importance of diversification in your investment portfolio. This means spreading your investments across different asset classes, such as stocks, bonds, and real estate, as well as across different sectors and regions. By doing this, you can help mitigate the risks associated with market fluctuations and ensure that your portfolio is well positioned for long-term growth. In conclusion, the recent news from the U.S. stock market may be concerning, but it's important to stay calm and focused on your long-term investment goals. By reevaluating your portfolio, considering opportunities in the market, and diversifying your investments, you can help position yourself for long-term success. Remember to do your own research, seek professional advice when necessary, and always stay informed about the latest market developments. Thank you for watching, and we'll see you in the next one.